Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Andrew Dunlap is the founder and CEO of Harbor, a holding company that buys established Virginia businesses to keep them in Virginia. In the last 5 months, he acquired a CNC machine shop, a FINRA-registered broker-dealer, and is wrapping up a deal on an industry services company. Folks, I'm super excited to have Andrew on. He's got a different approach, a different model, not only the Virginia focus, but also some other things that you're going to hear about. Andrew, welcome to the Deal Quest podcast.
Corey, thank you so much. Love the podcast. Super grateful and excited to be here.
Yeah. So listen, Andrew, I want to hear all about, what your approach is, the differentiators, the kind of companies you're buying. But before we do any of that and talk about, maybe some of the stories in your background, I want to take you back to when you were a little kid growing up, maybe 8, 10, 12 years old. What did you want to be? Because I'm guessing a, serial acquirer and investor in businesses likely wasn't it back then, but maybe I'm wrong. You tell me.
No, absolutely not. I wanted to play sports and kick soccer balls forever. And, I wanted to be out there on the field moving and doing something as an athlete, and quickly found out that I wasn't talented enough to do that as a kid. And you found myself, going into the normal world with everybody else.
Yeah, I will tell you, it was an early awakening for me that, my Brooklyn schoolyard basketball skills at 5'8", which I was pretty decent at, was not going to translate at anything above the Brooklyn schoolyard level.
Right. Exactly. Same realization for me.
I love it. So one other question, looking back, what was your first deal of any type? Whether it's early in your career, maybe it's even younger, anything you consider a deal?
Yep. So I struck a deal with my neighbor to mow his grass for a particular party that he had, but I wanted to do a 2-for-1 deal, and I knew he needed his grass good for a certain night. And so I kind of negotiated a bit of a package for him and said, okay, well, I could normally charge you this, and I would charge you double that for 2. But if we do 2 within a week, I can get you this price. And so we kind of got a little bit of a bulk rate. And that was my first taste of kind of getting into the negotiating table as a young kid with my neighbor.
I love it. So, before we even get to what you're doing now, I mentioned in the bio several of the companies that you just bought recently, and, the differentiator you have in terms of the way you approach things and strategy. Talk to us about how you even got here. What did you do before? When did you start this? What was the journey?
Yeah, it's a crazy story. And everybody asks me, how in the world did you find yourself in this position? And people want to replicate it. People want to, you've got all these MBA students coming out of those classes trying to figure out, how do I become, a fund or buy companies and hold companies as holdcos have become more popular. And honestly, I stumbled backwards into it trying to solve or come up with a solution to what I perceived to be a big problem in the state of Virginia, which was, how do we keep more jobs in the state? How do we keep more exciting career pathways? I live in the southwest part of the state in Roanoke, Virginia. I've been here 10 years. I'm from Baltimore originally, so I came from a large market and moved here 10 years ago to help a company kind of get itself ready for a sale.
Okay.
We got it sold, and I started a number of companies after that. In January of 24, I was coming out of a venture-backed startup that I helped form that was based in the capital of Virginia in Richmond. And I was looking around thinking, okay, there aren't exactly a ton of jobs that I can just go and apply for or C-suite jobs I can jump into. So, but why is that? Why aren't there more? Virginia is a beautiful place. We've got mountains, we've got the coast, we've got farmland in the middle. It's very resource rich. Why are there not more career pathways here? And so I did what any nerd would do, and I dug into M&A data. I pulled databases of data down and said, who are buying all the companies that used to be here? Because, I've heard the stories that Advanced Auto Parts was started in Roanoke. GE used to have a huge presence here. They bought a bunch of companies that were in Roanoke. Those were all gone. Norfolk Southern, the train, they used to be here. So where did all those companies go and why aren't they here? So I started looking at who the buyers were, and I discovered that, in Roanoke, 87% of all external buyers are the ones that are buying all these companies. And so in our region, all those companies that get bought, 87% of the time, it's an out-of-state buyer. I was like, that can't be the whole state. Let me back out. So across Virginia, 82% of all transactions that happen are by an out-of-state buyer.
Wow.
So I thought, okay, well, that's where the career pathways are going, right? Because the owners take the companies out and then they take their C-suite to where they are. So I thought, okay, well, what happens? Is that a bad thing? Does it matter? So I started digging into the research that's been done around, okay, when an HQ is in a place, is that important? Is it not? And so what we found was that when you have an HQ in a particular city, 53 cents of every dollar of revenue recirculates in that particular place.
Wow.
When you take it out and you move it somewhere else, tier 1 city usually, that drops to 14 cents. So there's this huge economic outmigration. You have this huge talent outmigration. And with the rise of private equity, in the late 70s, and it's got popularized 90s and early 2000s, that activity has kicked up. And so there's just been a ton of companies that have migrated into roll-ups into the tier 1 cities. And that's just led to this kind of gravitational pull of talent, capital, businesses out of your smaller tier 2, 3, 4 cities. And so that was kind of the realization of, okay, that's a pretty big problem if you fast forward 15, 20 years down the road. What happens to our tier 3 cities? Do they have capital? Do they have people? Do they have businesses? Are they just tourist destinations? And so that was kind of how we kind of came to it and thought, okay, there's two pathways here. Do you legislate your way out of this problem? Do you go run for political office? And that's what a lot of people say, hey, you should go do that. You should go to the Hill and shout really loudly about this. I didn't think that was the best pathway from a capitalist and free market perspective. So I thought, okay, maybe we shouldn't regulate how M&A is done, but maybe we should just say, let's go build a mini Berkshire Hathaway. That's the Berkshire Hathaway of Virginia. Buy companies in the state to keep them here, and then build a recruiting engine to bring all these great Virginians back, kids that were educated here, people that have grown their careers elsewhere, incentivize them to come here, living in this amazing state, and help build the future of the state.
Wow, that's amazing. I love that. It's interesting. I'm wondering whether you think, separate apart from your specific, efforts in Virginia, but, obviously one of the reasons why there used to be a concentration in quote unquote tier 1 cities is, people used to go to an office and they had physical headquarters, right? And that, and physical proximity made, more of a difference. Do you think that the trend, obviously, for remote work and things like that, whatever, you hear anecdotally, at least, that people are living in, places they'd prefer to live, other than the quote unquote tier 1 cities. And you're talking about a guy who grew up in New York and lives mainly in LA now. So I'm one of those guys. But, but frankly, I went to LA because I knew I could work from anywhere. And I live, on the west side, by the beach on the marina. And that's, I don't live here because of I live here for lifestyle and weather, not because I need to be here because it's a business, big business city. So do you think that somewhat of this remote trend will help, reverse that concern you had a while back?
I think yes and no. I thought during COVID, we'd see a huge explosion of people moving to these beautiful places. At least where I live, Roanoke is a gorgeous mountain town. There's unbelievable views from almost everywhere in the city. And yet the cost of living here is very low because our growth is pretty much flat. And so why is that when it costs so much to live in Boulder and Denver and some of these other very prominent mountain towns?
Yes.
And I think that it's what we haven't seen is the remote workers come to Roanoke. Now that could be we're doing a bad job marketing ourselves, or it could be, and I think this is my particular opinion, digitalization of society has made people very lonely, and people yearn and long for in-person experiences. And I think we've seen all sorts of companies index back towards, hey, there's nothing like being in an office with the guy or the gal that's 10, 20 years ahead of you and learning on the ground from them. And so, that's great for places like New York. That's really bad for places like Roanoke, where, we don't have tons of offices where people are clamoring to get back to. And so for us, if Virginia wants to be a place where people want to go, we need those senior level people, those executive roles to be here, to draw magnetically and gravitationally those really great next generation leaders to want to come back, learn from them, follow them. And I think that's an in-person experience. That doesn't happen over Zoom. I've run a remote company before, and there is huge things that you're missing when you're not physically looking someone in the face, telling them how they can get better, and working side by side to help them improve their career. It just isn't.
Love that. All right. So you have this philosophy, this concept, this passion, right? You did all your research, you got the data, you understood it, and now you have this commitment. What do you do to launch this, launch this company? How did you launch it? Do you have partners? Did you fund it? Like how'd you get started?
Yeah, it's a great question. So we looked at, okay, so if you build a holding company, you build the mini like Virginia Berkshire Hathaway concept, how do you actually go to market? What's your differentiator? And we've gone to market with just the whole line of, hey, we think that companies should stay in Virginia. And we think that the state is going to do better when there's more leaders here. So depending on who I'm talking to, I'll tell this story in different ways. So, our job as a fund, as a GP, is to grow the wealth of investors. And that is our goal. But fundamentally, the way we've constructed our fund, as the fund does well, we are going to be magnetically placing good leaders within our portfolio companies. We are going to be recruiting the next generation to learn and grow through those companies with them. I think there's a huge desire of people to work in companies that have good culture, work for leaders that are exceptional. And so we know that it doesn't really matter a ton what the widget is or where it is. There are people that want to work for great people. And so that's our goal, is to bring great leaders to a place. And again, great leaders are part of making a place really stable in what it is. I mean, I think there's a direct correlation to, if you have a large number of leaders in a place, that place will be healthier than a place that has less leaders. That is just kind of a fundamental basis of society. You have leaders that want to serve on the board of a nonprofit or another company, or meet in a CEO group, or give to a charity that's local, or even coach a little league team. When you have those components in a society, all society looks at that and says, hey, I want to aspire to be that gal. I want to aspire to be like him one day. I want to go work for him, or ask him, or I'm going to learn from him. And suddenly the tide, right, it lifts all the boats in the area, more people that leave that area. So that was kind of our thesis, like, okay, let's get the HQs. We'll be the GP. We'll grow wealth for investors. But by doing that, we will keep leaders in place. And so we went out and we started telling this story. And we said, okay, Mr. Owner, you want to sell your business, you're retiring, or you're just kind of at the end of your line with this thing, and you want the next legacy holder of this thing to kind of come in. Who do you want that to be? You have kind of three options, right? You have a strategic, someone to roll you up into their bigger thing. Yep. You have a private equity firm that, they have their set of requirements, mandates, their goals. And then you have someone like Harbor that's going to come in, and our goal is to keep your team in place in the town, city, place that they were built and raised and grown, that town that has you as the sponsor of the local, stadium. Which would you rather have? What do you want for the future of your company? And every single time I sit down with an owner and posture it that way, they say, well, why wouldn't I want Harbor to be the one? Are you going to pay me like half of what everyone else is? Like, no, we pay fair value. We pay you kind of market rate for what your business is. And they say, well, I want you guys to be the one. And so for us, we came into the market with that narrative, and it's just exploded, and people love it, and people are excited, and people would rather have someone that's going to protect that legacy, that's going to carry it forward the way they did, over someone that wants to flip it in 3 to 5 years, kind of like a house. So that's kind of been our differentiator in how we entered the market.
Love it. So did you raise the fund first, and then you went out to market, and how do you do it in terms of the capital? Do you have multiple funds? Is it a single fund, and or are there SPVs? Like, what's the model?
Yeah. So we thought about it in different ways, and we got a lot of feedback from investors of kind of what they wanted, because again, this is about them and growing their capital. And so what we ultimately settled on was a fund that was kind of open-ended, that we said, okay, here's the deal. The fund clock on a traditional fund is sort of the impetus. It's the gun to the head of, you have to exit in this period of time.
Yes.
And you need to get this return in this period of time. And that drives what we describe as caffeinated decisions, right?
Okay.
It's going to be great in the short term,
Yes.
but it's not necessarily going to be great in the long term. And that's fine for you because when the crash happens, the caffeine high comes down, you're going to be out of the asset. So it doesn't really impact you, but it might impact the town,
Right.
the people, the jobs, the future stability of the company, and all those things were unacceptable.
Because in a normal fund,
okay.
in 5-7 years, whatever the number is, right, the investors are expecting an ROI, a return, and
Exactly.
and the folks are managing towards that and timing towards that.
Exactly. And there's nothing wrong with that. That's their mandate. That's what their job is, to get money back as fast as possible within that window. But we thought, okay, we've seen some of the decisions you have to make to do it that way, and that's not the decision matrix we want to be in. So let's have an untimed fund.
Yes.
We'll have secondary windows that open in the fund, but let's go out and find deals first instead of raising a blind pool of capital. And so we went out and we found some really incredible deals on the backs of this story and said, hey, Mr. and Mrs. Owner, here's who we are. Here's how we are. This is our team. We've all operated businesses before. We're not, coming in here blind of how to run a business. We want to take this thing and steward in the future. Would you like to do this with us? They say yes. We go out to our investors, get some commitments, and that capital comes into the fund to ultimately get deployed into buying that asset. And so over time, we've just bought several businesses, deployed those capital that's kind of been committed, and the fund sort of grows as part of that, to get those deals done and steward those assets forward.
I love that. And so really talk about like the folks who are investing that. Obviously, they have to have a longer time horizon, more patience. It's a different, there's several things you're doing in this business. Obviously, you have to find the deals, you have to find the right companies, and you have a value prop out to those right folks. But also, it's a different kind of investor that's going to invest in with you in terms of the capital side of it than will be at a PE fund who's playing a multiple arbitrage game and is going to buy and sell businesses or roll them up, right?
Possibly. I think our projected returns, and again, we're only 2 years into this,
Yep.
Corey, but I think, our projected returns are going to be as good or way better than PE market based on the entry prices we're getting on some of this. So that's really exciting. But ultimately, as we partner with these businesses, they want us to be the buyer. And that, again, sets up deal structures that wouldn't necessarily be afforded. We do have, I think, what's a very enticing structure. So we don't have AUM fees because that eats, let's say 20% of an usual fund if you're doing 2% a year for 10 years.
Yep.
We have no time limit. We also have a 7-year secondary window. So theoretically, you could be out faster than you are in a traditional fund.
Yep.
We also distribute cash every single year.
Right.
So you're getting cash on cash every year in our fund. You're getting a secondary window shorter than a traditional fund. And so you're getting no AUM fees. And so we looked at that and thought, okay, this is a better deal. This should be more enticing to most people. And so, yeah, our LPs are anything from family offices to high net worth individuals. And we're talking to some institutions now. But at the end of the day, we are a bit different, but we're trying to align it to something that almost everybody can get behind and get excited about.
Love that. Love that. It's, and listen, the longer term view on, there are plenty of folks. I mean, we do a lot in financial services. We have a lot of wealth management clients, and PE money has come into that space heavily. And, I was speaking recently on a panel where, there are certainly PE haters out there, and I'm not one of those guys. I'm one of these people who's like, listen, you got to just understand what PE is. PE is what PE is.
That's right.
There's a particular mandate they have, this particular game that they played. You are going to have, high growth is going to be prioritized. And some of them are going to be very successful. If they're doing a funded roll up, for example, and playing the multiple arbitrage game, there'll be winners and losers. And that's, we can go on and on and on. But, I don't think it's inherently bad or good. It serves a particular purpose, and it's good for certain people, right?
Absolutely.
You are, it's easy to demonize. Like, I think back to was Pretty Woman, right? Where Richard Gere was, right, chopping up companies. And he goes to the old guy and he says, we're going to build this together, right? So, but it's easy to demonize the early side, but there are a lot of good people in PE, right? But this idea of, I mean, if you're committed to Virginia and you're committed to, legacy, and you're committed to employment and attracting leadership and, and executives back there, whatever, then, the PE model does not align with those other objectives necessarily, right?
Sure. Yeah. And I'm with you, Corey. Like, PE is an extremely important part of our society. A sophisticated society needs all kinds of different financial instruments to go. The US is no different. We need PE, we need long-term hold, we need the Berkshire Hathaways of the world, we need annuities, we need all these things to solve the problems that people are trying to solve with their capital. Harbor is simply one that is saying, hey, while we're solving this particular problem of growing your capital in these ways at this rate, we're also you're thinking about the ramifications of these investments. That is not most PE firms' mandate. Some of them it is, but it's not everyone's, and that's fine. That's what their investors have signed up for. It's the way they want to grow their capital, and we need those folks. So I think we're all sort of different body parts in the whole system to kind of make this thing go forward and work in a functional society.
Yeah, so let's talk about some of the acquisitions you have done and, the areas you're getting into and what's been attractive to you.
Yeah, so Virginia is a really interesting state in that we have everything from, Northern Virginia, the defense tech space in, DC down to, deep, sophisticated advanced manufacturing in Southwest. And then you've got, all kinds of farm tech companies coming out of, the central part of the state. So you just got this array. We have like the largest submarine building. The Navy has a huge sub base on the eastern side of the state, but also in the middle of the state, there's like sub testing company. Like there's all kinds of things in Virginia, which is what it's such a cool thing about the state that people don't realize. So we've looked at all kinds of deals, and people early on that heard our thesis thought, oh, you can never find enough deals to do in one state. And we have found that to be completely opposite. And I bet almost every state has a similar story. There's other groups like us all over the country that have done this in like their particular states. So there's all kinds of interesting things that happen in Virginia, but we've looked at manufacturing a lot. We've looked at industrial services a lot because we have a talent base, frankly, that understands this at I would say, globally professionalized level that is really ahead of where most people are. So we think, okay, we have talent that is aligned to certain industry verticals. Let's look at some of these things. And so one of the first things we did was looked at metal fabrication, companies that need and have specific needs that are very not only engineering intensive, but labor intensive and machine intensive. And how do you put all those things together and do it well? And we found an amazing opportunity with a group down in a small town in Southwest Virginia that, by and large didn't really have a ton going on, but really wanted to keep this one business. We wanted to keep it there. And the stars aligned for us to be the buyer of Clark Precision Machine, which is, one of the acquisitions we did this year. And so that deal was a confluence of the county was really excited about this. The owner was in his early 50s, looking to take some chips off the table, but really excited about continuing to grow his business, but wanted some other heads in the room to think through scaling challenges and think through how do we get in front of certain customers that we've just had a hard time with. And so we came in at a perfect time to kind of bring a lot of that together, to bring some growth capital and say, great, let's go and let's double down these things. Let's bring our horsepower into marketing, into, talking about how do you go from doing 75,000 parts a year to 100,000 parts a year. And how do we do that in short order without killing your team and making your culture terrible? And so those are some of the problems we tried to solve with them. And it's been phenomenal. The other day, the owner, the guy that stuck around, he's signed a 5-year contract to continue running the business with us. He posted it on LinkedIn about just how great a partnership it's been. And we're so grateful. Like he was kind of expecting a shoe to drop and this to be this terrible thing for us to, drop the hammer on him as soon as the deal closed. And day 1 came and he was like, okay, nothing's happening. Day 30 came and he was like, this is actually really great. And day 75 came and he's like, this is a really great partnership. So we're just great. That's his words, not mine, but we're just super grateful to have found an amazing operator that was looking for some additional horsepower and to be able to provide that. So that was one of them that was just super fun to do.
I mean, that's a great testimony. I mean, you certainly hear many more examples, where outside buyers come in and, all right, where the founder, and listen, sometimes it's not even that the buyers or the investors are bad. It's, it's just, there is that shift that somebody has to go from being the king or the queen and, being that entrepreneur, the founder, yes, and having control over everything to not even in very good situations. That's a tough, I talk to my sell side clients about that all the time, right? If they're going to stay on, yes, and they got to, really understand that. But, and then of course, you do have your horror stories and, whatever as well. But even in good situations, it's a challenge. So that's great. Are you doing full purchases, majority, minority, any combination? What's the model?
So we try to be very flexible in how we come to an owner. I mean, that's kind of the whole point of Harbor, is to be a different kind of buyer that's not trying to shove square pegs into round holes and saying you must do it our way or the highway. And so we come in with a very transparent approach to an owner and say, hey, here's the deal. We want to be the next, legacy owner of this particular thing that you've created and blood, sweat and bled over. And it's like a family, a member, a kid to you. So here's what we want. We want to buy this thing from you. We can do all of it. We can do most of it. We want, at least a majority, not because we're going to dictate things to you, but because we want to be a partner in this with you. We can do an earnout. We can do seller financing. We can do a full equity swap. We can do debt or no debt. What works for you? And here's what we need in exchange for this deal. We need to get a return for our investors, and we're very upfront about that. We need, mid-teen returns plus on this thing, year over year, cash on cash. So that's kind of what we look for. So how can we structure something? And sometimes we can't get to a number that works and pencils for everybody. And it's like, okay, well, this probably isn't a fit for us. I'm sure there'll be maybe a PE firm that'll pay you 12 times and that's great, go for it. But that's not for us. But if there is a deal to be had there, if we can make that work and all the numbers align, then we're like, fantastic. We're willing to be flexible and make this work for you. So far we've done, 3 deals, 3 completely different deals. And they've all had very different flavors to them, different arrangements with the owners after the fact, different financing structures, different amounts of equity, and some had debt, some didn't. But ultimately, we try to come in hands open of like, hey, Mr. and Mrs. Owner, we're not on the other side of the table with you. We are, if we all agree this is the best thing for the business, let's solve this problem together and build the structure of the deal with them.
Love it. Love it. Let's take a break from the show for a minute so I can tell you about an incredible resource my team and I have put together for you. Secrets of Deal-Driven Growth, Creative Ways to Grow Your Business Even in Challenging Times, is a powerful ebook that helps you take DealQuest podcast episodes and apply them to your own life and business. This is the ideal tool for anyone looking for creative ways to grow as deal makers, and you can get yours now. It's as easy as heading to coreycupford.com/workbook and downloading your copy. While you're there, you can also consider joining our dynamic deal-driven community of founders, experts, small business owners, and entrepreneurs. Now back for the show. So talk to me a little bit about, your background and the team. So like, what's the background on you folks in terms of, how you know how to do this, how to raise, experience raising capital, how you evaluate deals. You talked about who's the, who's the we and where do they come from?
Yeah. So we have an amazing team, and that's, full-time people and, people that are kind of are in our ecosystem that are advisors and consultants, people that have been part of private equity firms for a long, long time. So we've got an amazing group. It's full-time in Harbor. There's 3 of us full-time. We've got Todd Fisher, who's M&A attorney. He's a securities lawyer that came out of a family office that was doing deals, all over the place, taking companies public, taking companies private. He's just done, tons of things primarily in like the venture space with huge companies and huge acquisitions. So he's a huge value add from a strategy perspective, from a deal structure perspective, legally, obviously. So he's fantastic. Krista Glassburn is our, operations savant. I'm not sure I've ever met a better operator than Krista in what she understands, especially about manufacturing. She came out of, the Michigan manufacturing world where she was growing up. Most recently, she was running a manufacturing company in Tazewell, Virginia. She grew it from 15 to 190 million. She bought 7 companies all over the world, bolted them together, made this huge global conglomerate. It just did famously well with that. And then there's me. I came out of venture-backed startup land most recently and was building a software technology company in partnerships. We had users in 60 countries, and my partners are running that now. And I'm, get to be in Harbor every day, which is fantastic. But so we kind of bring all these different pieces to kind of bolt together to make this team that has very, very different skill sets. And then again, we've got this ecosystem of consultants and advisors and partners and even LPs that are, very helpful and will say, hey, have you thought about this? Or I got a deal, or what about this? Or can I get on a call with people and just say, hey, here's what we're thinking about this. And what do you think? I was talking to a guy yesterday who's done every type of deal you can possibly imagine and just bouncing some ideas off him. And, he's got a group that they do acquisitions all over the world. And so we just have an amazing group that's come around this and said, hey, this is important. Virginia really needs this. And then we've got LPs that are outside of Virginia that are helpful and come into this, and they're like, hey, we don't necessarily have an attachment to Virginia, but we love the model and we see that you're getting proprietary access to deals. People come inbound to me all the time now and are just like, hey, we don't want to go these traditional pathways. Like, can Harbor be a buyer of our business? So we just get really interesting deals and structures that, makes everybody interested, makes everybody kind of want to be a part of what we're doing. And we do want to see it grow beyond Virginia. This is kind of where we're starting, but yeah. I think there's a lot of people rooting for this to be a thing everywhere. And so, yeah, that's our team and our kind of our donut of people around it. But yeah, we've got some tremendous people that are way smarter than me that are helping get this thing going in the right direction.
Love that. So let's, Eddie, let's talk about some deals, stories, experiences. Like, I don't care how successful people are. There's always one that went bad or that you thought you were going to get and you didn't get, or, so what do you got in that area and what lessons did you learn from those experiences?
Oh gosh. Two things. One that's like a real scar, and another one that was just like a near miss. So I'll tell you the easier one first and the painful one later. But the first one, we were deep into talks with the company, a great manufacturing company. We really loved it. We loved the team. We loved the guy that had been running it. They were part of a European conglomerate, and they were based right here where I live in Roanoke. And none of our deals we've done are in Roanoke. And so I was like pretty excited about having something in my backyard that was like I could drive by and be like, oh man, this is a great place, and go visit them and bring lunch and whatever. And great group of guys. And so we were kind of getting very close to a deal. And then we got a call from the guy that was brokering the deal, and he said, hey, everything has stopped. Everything was on pause. And he didn't know why, and he couldn't really share anything with us. And so we just waited, and then eventually we never heard much more than that. And, several months later, we were looking at the news, we were looking at the European, PE news, like what happened here? Like what? Well, we found out that Samsung had come in and bought the European parent company. And so it just, everything shut down. The whole company was like, everything stops. Nothing goes out, nothing comes in while Samsung gets her hands around this. So that was just one of those, you put all this time and energy and effort and love into something, and then, Samsung comes and buys the parent, and it's like, yeah, that deal's done. I hope it comes back, but that was one of those unavoidable. Yeah, who knows, right?
I mean, that's the classic example of what any deal person tries to preach to clients or investors or whatever, and that it ain't done till it's done.
Yes.
So.
Exactly. Until it's signed and the money is wired, like, you're not finished. That was a good early lesson. That was last year. And Samsung, if anyone from your team is listening to this, please call me. We still want to do that deal. But then another one, we cornered a company for a long time, and they kind of dragged their feet a little bit. And so we were a little nervous about that, but we were like 6 months into this, couldn't really get them to commit to like a number. They kind of kept asking for more. And so we went up a little bit and thought we were giving them a very fair deal. It was a very fair deal looking back on it. And then they randomly came to us and said, hey, we got another buyer. And we knew that it wasn't PE because they told us they would never sell it to anyone outside the area. And so we thought, okay, why is it stopping? They wouldn't tell us anything. And so the deal just died suddenly. We didn't know anymore. And so we started kind of doing the whole like, what happened here? Like, why did this deal die? We knew them. The CEO was really excited. The whole management team was excited. The owner wasn't really involved day to day, but he seemed to be really positively disposed to us. And we had told them a bit about our plan post-acquisition of like, hey, here's kind of what we want to do. We want to build a partnership with this other company here. There's a lot of there's a lot of great synergy. We think we can help each other. And that was part of getting them comfortable with us being the buyer. And so we found out a couple months later when it was announced publicly that they had basically broken some NDAs and gone and merged with that company. And so we just kind of got cut out of the deal and they just said, we'll just do that ourselves. And they went and did it. And that was a huge lesson to watch this awesome deal that we were super excited for and spent an insane amount of time and money on getting that deal done and building out our growth because we thought it was a lot. They were excited. They said they were excited. And then someone killed it on the final, the 1 yard line. And then they just went and did our plan without us. So it was like, okay, be transparent, but don't overshare or else you will just get cut out of the solution. So one of those things that I felt dumb about afterwards, but we were just trying to win the deal and just did a little too much of that. So that was brutal. I still miss that one.
You know what? And I guess, some people may say it's, that I have an amazing ability to justify, but I also actually truly believe it. Like in those situations, I'm not saying I wouldn't be, have feelings about it and be whatever and frustrated. But ultimately, usually will I come to the place as well, if they're the kind of people that would do that, probably a good thing that I didn't end up in business with them. Like, that's like
Right.
It's a gift in a way, right?
Right. I agree. And I still love the management team. I still don't understand what happened behind closed doors.
Right.
And I hope it all comes back. I think one day there's a possibility, that it could all work out and we could still, be the next holder that continuing that legacy. And so we're holding out hope for that one. But yeah, don't overshare is the lesson we learned the hard way on that one. So
I love it.
Yeah.
So I'm sure, in the deals, the ratio of deals you look at to deals you close is, I'm sure it's taken 100 or more, right? Probably to get 3, right? Something
so many.
Right? So what is it that, and obviously the ones that you're looking at, I don't know whether, you approach folks that are not on the market or you're looking at all market deals, some combination. But the point is that there are a lot of folks that want to sell, but then they end up, not being able to find the right buyer. So what is it like in all these deals that you look at and you reject, all right? What are the commonalities of what these companies don't have in place that like make them not attractive to a buyer like you or a investor like you?
Yeah, no, I mean, it's almost always the same thing. It's a lack of a sales function. It's a lack of a GM that actually can do something. You walk in and you start talking to the owner and they're like, yeah, I've got some gals or some guys that can, they can run things day to day. And you just ask, do they do that now? Like, well, no, like I run things and you're like, okay. So then you talk to those people or you talk to somebody else and they're like, they definitely can't do it. Right. Like they are and so, that's like, not that they couldn't grow into it, not that you couldn't hire somebody to pull in, but once you have that cognitive dissonance of like the owner thinks X, his employees on the ground are saying Y, what else is he maybe misunderstanding? So that's a huge, red flag that usually kills a deal. But then there's also the hockey stick that comes right after the purchase, right? I see that on almost every deal is like the growth forecast that you see. And this happens in Sims all the time. If you get something through a broker, it's like, oh, you haven't grown or you've been pretty steady, linear 5%. And then right after we buy it, it's going to go, 35% growth year one. Like, help me understand how that's even possible. Because in most businesses, like outside software, like, the infrastructure to grow that. Like your team's venture team, they don't know how to scale quickly. So you just, those are the types of things you just raise your eyebrows and are like, yeah, I mean, we'll ask you more questions, but I kind of doubt this is going to be a fit if you don't know you're bluffing already, right? You're being too positive and optimistic. And we just want to have an honest conversation. Like 5% year over year, we can live with that. Yeah. But don't tell me it's going to be 35% year one once we have the reins. And then you also want to get paid for that.
Well, right. That's because the piece of it is that they want to get paid for that. Right. And and whether it's the conversation of the management team or the, whatever, being able to run it. The first question is, well, if they could, why aren't they already? Right. So it's sort of like suddenly they're going to be able to,
exactly.
Right. And the same thing on, on the, 30%, why aren't you doing it already? Now, by the way, sometimes there's reasons like, oh, we just got this new big customer. We expanded our facility.
100%.
We were, we had lack of capacity. We always had all this, interest, but now, and in that case, then it just comes down to deal structure because you're still not going to pay for it up front if it hasn't manifested. But if there's an actual reason why you believe that's possible, okay, then you put it in an earnout or you have some, triggers, for it, whatever. And then it just comes down to structuring. But when it's sort of like, oh, there's no real reason why we think it's going to take off or it's a bogus reason. And then we want to get paid for it up front. That's a problem.
Right. Yes. You nailed it. Because usually the question that snips it all out is like, okay, great. I mean, if that's really going to happen because X, Y, and Z factors have come into play that have never come before, fantastic. Let's do an earnout. And if they say, well, I don't know about that, it's like, well, okay, tell me why. Right. So that's like the real bluff test. Like, are you sure you really believe that? Because if you would totally sign up for an earnout and say, yeah, it's going to happen no matter if a monkey's running this thing. So that's kind of the funny tell, right?
Yeah. It's funny how you can. Yeah. And it's interesting to me that because you sort of look at it from the reverse point of view. Like when I speak to, my clients who are, whether they're existing clients or they get introduced to me and they're thinking about selling, right? If you have smart advisors on the sell side, what buyers and investors are going to be looking for, right? So, you're going to say, okay, who really runs this company? Is it all dependent upon the owner, right? What are you looking to get out of it? And, okay, you think it's going to grow this much, how could you possibly justify it? And then, but what it also gives folks, I don't know about surprise. I've been doing this for 40 years, so I'm not so surprised anymore, but it's sort of like, if people really understood what buyers and investors are looking for, that actually gives them a roadmap of what they could do in advance. Like if they're going to look at, okay, do you have a management team that really runs this, as opposed to going to market now, unless you waited too long or you're sick or some life events comes up, whatever, go spend the next couple of years and really getting your management team to run this and getting yourself out of the business, because then you're going to have more interest and better valuations, to a seller if and when you do that.
I couldn't agree more. And I don't understand why we meet so many guys that are over 70 and somehow have never thought about this before. And they didn't take the step to say, hey, let me talk to my attorney I've been working with for 30 years about this, before I get to the point where I have to sell it right now. They just, get introduced to a broker that they don't know from Adam, that doesn't know their business. And they try. So people like yourself, or like their CPAs, or, their whoever has been in a life for a long time. This is why having an attorney, I think, is so important, even if you don't necessarily need them every single second. But just having someone that is in your corner and is for a long period of time builds trust and rapport and understanding your business, so that when you do have moments where you get approached to buy your company, or you're like, hey, I'm 65 and I want to cash out, suddenly you have someone that's been around. They've seen it, they've tasted it, they've touched it, they know all the problems, and they can help posture and not even broker officially, but it's so helpful for us to talk to an attorney that knows the business versus someone that's just brought in for the deal, because they can help us, filter through even, hey, here's the stuff that maybe the owner didn't even state that's like really good about this business that you're getting. We've had CPAs help us with that. Or like, hey, I know the numbers look this, but look over here at this. This is the value we've seen over decades. And that has been an unlock that, again, partnerships are magical. And it's just been incredible partnerships when you've got people that are in that, legal and financial decision-making seats, helping the owners work to give us information that is gems. It's super helpful to getting deals done.
Yeah, no, I 100% agree with that. The only tweak I'd say on that is what happens, unfortunately, sometimes is that they may have a great, like, let's say, corporate attorney or general attorney relationship, but that person, maybe they form their entity to do their basic contracts, but they have no deal experience whatsoever. And then the problem is that they don't, yes, they know the business, whatever, but they don't work with folks, not only to do the deal, but even to understand what they can do to create enterprise value, what buyers are looking for, just because they don't have that kind of experience. So your general corporate attorney, or God, I mean, I can't tell you how many buyers, I was at a conference a little while ago and, got to talking to somebody on the buy side, and they had their big firm counsel. They were PE backed. They had their big firm counsel, but they were like, oh my God, Corey, we got to add your firm to the list to recommend to sellers. All right. Because we need a broader range of counsel to recommend, because we end up doing these deals with these general, or even worse, like he was describing a situation where the guy's trust and estates attorney was trying to do this deal. And what people who are not sophisticated or not experienced in the deal market don't understand is the buyers actually want to deal with, like, you think, wouldn't they want an experienced attorney on the other side? They can take advantage of that. They don't want that. They want professionals. They want deal attorneys. They want experienced, accountants and investment bankers or brokers. It makes the deals so much easier for them than dealing with somebody who doesn't know what they're doing. So it's
100%.
To get that right team around you.
And that I couldn't agree with that more. And yeah, I would say if your attorney that you work with, your general, counsel, isn't part of a group that has that specialized M&A person, then yes, you gotta have that. You gotta have that. Because, I've heard people say things like, oh yeah, I've done like this before. And it's like, that's not what I want to hear. I want to hear you do this every week.
Right.
And you've done it 50 times before, or 100, thousands of times before.
That's right.
We've done a bunch of F reorgs recently, and that structure is so helpful for certain deals.
Yep.
And gosh, like there are certain people that I've talked to about that. They're like, I've never heard of that before. I'm like, well, I wouldn't want it to be your first rodeo if you were on my team doing this. So you're exactly right. M&A attorneys you guys are a super unique breed, and you got to have someone with the specialty experience to know what are the hurdles, what are the pitfalls, what are you going to have happen to you in the middle of the deal, and know how to save the deal. Because you probably know. Final hour is the deal. Here's what's going to kill it, and here's what's not. And you walk people through that fire, and there's just nothing like someone that can do it in their sleep.
Yeah, and listen, I'm fortunate because I love to do this kind of stuff, and we also, have companies we represent in general contracts, whatever, even before they're ready to sell. So, one of my favorite things is I have clients where we help them start up. And at this point in my career, some of them are 25, 30 years later, and we help them grow throughout it and then help them exit. Like, there's nothing like being with the entire, obviously, listen, we get referred in, even if it's just to do a deal. Sure, we'll take that business. We'll love it. We'll do a great job. But there's nothing like working with a company throughout its entire life cycle, from startup through exit. It's just so
100%.
satisfying.
Absolutely.
So listen, we could talk for hours, but we're coming down to the end here. Anything else, whether it's, what you're seeing in terms of trends? I mean, we're in such a crazy time. I mean, I guess maybe it always is, but it's a crazy time. I'm not getting into the politics of anything, but you have all these, weird factors going on, right? You got tariffs, you got inflation, you got war. On the flip side, the stock market's been strong for a long time. On the flip side, in the PE market, the capital markets, there's huge amount of money out there and dry powder sitting around, right? So you have sort of these conflicting, factors that, can affect deals. And listen, deals get done in every market, but, in terms of sort of evaluating deals, planning, trying to, I mean, one of the things I always say is that in the order of preference, people think like tariffs was a great example. They calmed down, right? But it's sort of like people have a view on what they want on tariffs, and that's their number one choice. The actual second best choice is what they don't want on tariffs, but at least they know what it is. And this is true, could be true on any issue.
Yes.
The worst choice is uncertainty, right?
Yes.
And we've had uncertainty, in various areas. So any case, whether it's in that context or otherwise, like anything you're just seeing out there in terms of the market, in terms of trends and things to watch out for, or things to be encouraged by?
That's a big question. And I'm going to give you a very unusual answer, but I think trust is the only currency that always matters.
Yeah.
You can have a great asset that today is awesome and tomorrow is terrible. You can have a great revenue stream that dries up overnight. You can have a solid AI bet that you made that suddenly gets merged with something else and disappears. There's all these volatile moments, and I think it's accelerating in our society. But if you have trust that you build with relationships, that is a stabilizing factor. You've done it with this podcast, and I think it is very misunderstood and underdeveloped in our current modern element of society because of digital, because of globalization. I think that people do not index towards building relationships, which deepens trust, and I think stabilizes your life. Because when you have a crisis, if you have 5 numbers you can call of people that can help you with that. For us, tungsten just went through the roof with China. So our machine shop, they use tungsten in a lot of stuff. I mean, we're talking like, 300x in terms of increase of price. It's crazy. But we had, a congressman's phone number we could call and be like, hey, can you come to our shop? We want to have a conversation about what we can do. There's no price to that. There's no value. I mean, it's huge. So building trust, building relationships, putting yourself out there and being known. I write a lot on LinkedIn about, what we're doing and how we're doing it and who we are so that people understand us, so that we can build relationships faster and deepen trust with people. You do this podcast 400 some episodes in, people know you and completely they know, hey, if I need an M&A attorney, I'm calling Cordy. And that's just something I think that most people just don't spend enough time and energy doing, is deepening trust with as many people as they possibly can to stabilize and balance their revenue streams and what they're trying to go and where they're trying to go.
I love that. And I think in your, that's true generally, period. That's great advice. And then, I look at your situation with the just thesis you have, with the philosophy you have, with the commitment to Virginia you have, with things like that. Like building relationships with stakeholders that have aligned values in general, but then also aligned specifics. Like you have a very, there's a benefit of that specificity, right? And that geographic commitment and things like that, because that's something that, well, first of all, because it's authentic, right? Creates credibility, creates connection,
right,
with other players that care about that, as well. Like Congress person is a great example. They're obviously going to, be much more inclined to come down and meet with and say somebody who committed to doing stuff in their, in their district or their state than someone else. So, like your model plays into that.
Yeah, overlapping incentives is obviously an extremely powerful thing. How can you put yourself at the center of a ton of people's desires and wants so that you are kind of overlapping with as many stakeholders and people and adding value to their life, right? I mean, so much of what Harbor does is intended to benefit all these different groups and stakeholders that, they're not all investors. Investors is one piece of what we're trying to accomplish and who we're trying to impact and benefit, and giving away as much as we possibly can for nothing is a great way to build credibility and earn trust. Again, you've modeled that perfectly by creating podcasts that we don't have to pay to listen to. We get to learn, and that's a huge benefit to society. So you've built a template for that I think we can all learn from. So I'm super grateful to have been here. I'm so glad you guys were willing to have me on and talk about deals that we're doing. We're grateful for your podcast. I learn a lot from it all the time. And yeah, this is just, you thank you for giving back to the world for doing this podcast for so many years.
Well, listen, I appreciate it. I appreciate having you on. So Andrew, if people want to find out more about, what you're doing, your funds, your investments, how to get involved, where should they go?
Yeah, harbor.capital is our site, and you can get to us through that. I'm Andrew Dunlap. You can find me on LinkedIn and other social sites. But yeah, that's us. So Corey, thank you again for all you've done for us, and we appreciate you.
Awesome. Well, final question I always ask on the podcast is about my highest value in life, which is freedom. And for me, that means everything from freedom around the world for people from oppression to why I've been an entrepreneur for decades and haven't had a boss. What does freedom mean to you, and how does it impact your life and business?
Freedom means finding incredible ways to impact the world, because I think we find our deepest levels of satisfaction, which is when I feel the most free, when I've done something that is tremendously valuable to other people. There's no better thing to do than to give than to receive. And I find that's true in business. If you can impact someone and make their life better, you experience depths of satisfaction I've never found in any other levels of success or metrics or dollars or anything. And so that gives me the freest feeling of like, okay, everything that we're doing 9 to 5 or, 100 hours a week, whatever it is, it matters and gives freedom to us emotionally and mentally and others. And there's nothing better than that in my mind.
Love that. Andrew Dunlap, thanks for being such a great guest on the DealQuest podcast.
Thanks so much, Corey. Appreciate it.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to cupforlaw.com. That's cupforlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.